Hi, everybody. That should be better. That sounds like it could be working. So there we go.
Yep, that's working.
Hey, Stephen. Very good to see you on here. Noni, Chizzy,
yes,
Amanda,
too.
Robert. Hey, everybody. So, Stephen, we're approaching the turn of the hour, or we're just getting up to it. Would you like to maybe get us kicked off? I just will point out to anyone who might be brought to the stage or to speak, I am recording and I'm doing my best to live stream this. So please forgive any mistakes that I make. It's the very first time I live stream. I'm live streaming it on the fundingtheglobalgoals.tv YouTube channel, which I'm just about to post links to. I've posted a link on Twitter and also on YouTube, on LinkedIn. So Stephen, over to you.
Well, first of all, do you mind making me a moderator? Then I can do two things. I can open up the room to people outside of the club, and I can also ping people in. Thanks.
Fantastic. Okay, so I've done that. So absolutely.
This is Private Equity in Africa Club. I think it's the largest club covering Africa on Clubhouse, and we are focused on the whole remit of investment aspects. Steve is here tonight just to talk about in finance, not just for Africa, but for all areas. The one thing we do in private equity in Africa is as soon as people sign up to the club, we invite them to be members, and then we allow them to set up their own rooms. So if you want to set up your own rooms, please do. The Private Equity in Africa Club is blessed with a deep wealth of talent. There are a lot of people in the club with a lot of experience of investing in Africa. So if you want to cover any particular area, please just set up a room, ask a question. If you schedule the room a day or two, you're likely to get a few people coming along and helping you out. And with that, I'm going to pass it back to Steve.
Great. Stephen, thank you very much. It would be really great, actually, if you wouldn't mind just giving us a bit of a profile of what you're doing in private equity, what your background is, just to get us kicked off, and why Africa you see is so important. And I think, you've done an amazing job getting this group up and running. I believe you were a relatively early user on Clubhouse, and there is something to be said for being early. But yeah, I just want, it would be a great for you to just get us kicked off and talk about your experience and your background.
Yeah, so I was lucky to get in early on Clubhouse, and that basically my entire career. When I started out back in the 80s, my boss was a pensions consultant researching private equity on the planet, and I was his bag boy, so that made me number two. So that was just a lucky break, and I became an early adopter of private equity. That was in the 80s. In the 90s, I was working with a particular pension fund, which was Goodyear Tires, and they had a plant in Wolverhampton in the Midlands in the UK. They had plants all over the world, and they had a couple of plants in South Africa. They were having some difficulties with their consultant, so the US parent said, we need someone to go down and try and sort out all these problems with the pension funds down there. No one in the US at that point in the sort of mid to late 90s was willing to travel to Africa because it was seen as a big, scary place. And so they came to the UK advisors and said, look, can you help us out? My boss asked if I'd go down, and I just said, yeah, sure. Given it was a 12-hour trip to Cape Town, I said, look, I don't want to just go down and spend 12 hours flying there, 12 hours flying back, and just do 2 days in South Africa. So what I want to do is do 2 days looking after the pension fund and spend the rest of the week doing manager research. So I flew back up to Joburg and started to conduct research on the private equity managers there. And late 90s, pretty much all of the private equity investment in South Africa was centered around Joburg. So again, I got to be an early adopter there and was just quite lucky to start investing, first of all, in South Africa in the early 2000s. Started research when I set up my own company in 2005. I started researching wider into Nigeria, Kenya, Egypt, Morocco, and was able to build up a knowledge of the market. Was getting pension funds invested more broadly from about 2013-14 onwards. And because it's been pension fund investment, tends to be larger deals. So we've done some interesting stuff from the cell phone towers business, IHS Towers in Nigeria.
Wow,
That's been fascinating. Gave us a good insight into what's going on in telecoms.
What kind of structure was that deal? How big was it, and when was it?
So we came in 2013, and it was already $1 billion company then. It's now worth about $5 billion, and we've had various discussions about where they're going to list it. I've been an advocate for listing it on the London Stock Exchange from day one, but the family behind the business has links in New York, and they want to list it there. But the second largest listing market for African companies is London, and New York doesn't have a lot of experience with African companies. And there's still that issue that most researchers and brokers in New York tend to come from a private school background, and they tend to be quite intimidated by Africa generally. But frankly, when it comes to Nigeria, they're just out and out terrified.
Right.
So
it's just such a perception issue, isn't there? It's just really quite fascinating.
Is. And you've got a bigger Nigerian diaspora working in London finance. So any broker is going to have one Nigerian guy who's going to be saying, yeah, I'll go and do that research because it's a free trip home. They get to do the research. It's all expenses paid, and it's an opportunity. So you'll see a lot more interest from London-based brokers, and just generally, Brits are less intimidated by Africa. So that's just my view. The simple reality is there is more representation for towers companies in New York. That means there's another two. So maybe they'll be able to do more research from there, but I'm just not convinced. But anyway, that's my view.
And Stephen, just before we just reset the room and just introduce everybody, and hi everyone, thanks for joining. I mean, the title is System Innovation and Finance to Fund the SDGs in Africa and around the world. And yeah, I'm just interested in what you see the gaps. I mean, we know there is massive potential, human potential. Clearly there's natural capital in abundance in many places, but we want to address the SDGs. So it's not about rape and pillage. It's really about intelligently managing those assets and harvesting, not necessarily just extracting. But I'm just kind of curious as to where you feel there is, in terms of the capital stack, not specifically private equity, but I believe there's a massive access to capital challenge in many, many ways. But I'm just curious as to what your view is, particularly having run this group since over the last few months. So where are the gaps?
Well, pension funds are cautious about doing anything in extraction, and particularly cautious about doing anything in where there's a link to commodity prices. If they want that, they prefer a more controlled approach to it. So this area tends to be financed in private hands, and it hasn't had a lot of private equity money in it. There is some DFI money in this area, but DFIs are possibly moving away because they are worried about the environmental and social governance issues. So, that they have very strong constraints in this area. So, I don't know what the way forward is, to be honest. And so, I've got to be honest, I was hoping you were going to have the answers. But the gap is, it's never been, it's not a market that's been institutionalized. You've got private families, and then you've got public companies, and there's not a lot in between. So, that's the gap. I think a lot of it has suffered recently, and there is going to be a need for more capital deployment. And I think as Africa tries to build out its manufacturing, it'll benefit from investment in this area.
Right. So, Stephen, if I just can thank you very, very much for the group. So you kindly agreed earlier today, or was it yesterday, to host this room under the Private Equity in Africa group that you set up. And I'm so grateful. I don't know whether I have all the answers. I've got a few ideas and suggestions, and what I'm trying to do is really create a business, an institution, fund. Essentially, we call it a Sustainable Innovation and Development Bank that's all about really driving the innovation in finance so we can get capital, fund structures, platforms, mechanisms deployed all over the world. This session is about Africa, but I care about how do we address the SDGs everywhere, and I think there's an awful lot that we can do. But just to say hi to everybody who's listening in, and what I want to say is what we'd like to do is invite people up to the room. So please feel free to raise your hands. If you are doing that, just to be clear, I'm also recording and live streaming this to YouTube. So you can find the link, I think, on my LinkedIn page or on my Twitter page if you want to see. Yes, so just to be aware, we are recording. So important to, I think, for the Clubhouse rules to make that clear, and you can see the record button at the top. So if anyone would like to raise their hands, feel free to do so. I also have a request. All of you apparently can ping people into the room, so we can get the conversation as broad as possible. If you have people in your networks who you absolutely know should be in this room, should be able to contribute, feel free to add them. I believe Stephen's just opened the room up to everybody, so feel free. And who's going to put the hand up first of all, or do I need to pick on a few people? I won't do that for the moment. So
no, I'd hold off doing that. But if anyone has anything to contribute to this area, or just a question to ask, just please come up. It'd be good to get some contributions.
Yeah, absolutely. I'm sorry, I'm multitasking as well, just responding to a couple of LinkedIn messages. So now Chantel has, that was you. So I'm going to invite you to speak. Come on, Chantel. And so the objective of the room. Hi, Chantel.
Hey, Steve and Stefan, how are you doing?
Yeah, we're really good. Thank you.
Welcome to the stage. Thanks for joining us.
That's okay. You're more than welcome. Thank you for putting the room together.
Yeah, thank you so much. And thank you everyone for listening in. So we've got quite a few people now, and this is really exciting. So Chantel, before I ask you to comment, and sorry also, maybe I can, you are muted, so thank you. Just for people who've just joined. So the idea really about the room is to talk a little bit about what I'm trying to do. I'm working to create a sustainable innovation and development bank. It's called Transform Global. The project ultimately has been a long time coming. It's been not the easiest of rides, but for a lot of reasons, it feels like it could be very close to coming to fruition, and at a time that the world needs it massively for post-pandemic recovery, but to address the SDGs. And basically what I fundamentally believe is we need a revolution in how we finance people who can deliver the greatest impact. I am although I am a fan of venture capital and private equity in certain circumstance, I actually have some pretty strong beliefs that the 2 and 20 10-year model that is used traditionally in venture really isn't possible or isn't suitable and fit for purpose for the kind of funds that we need to deliver impact. The impact investment activity is so important, but it doesn't deliver patient capital in the way that I believe is necessary. So in the development of Transform Global, I've really looked very deep about would it be possible to create fund structures that are new and innovative, as well as platforms that can provide the capacity building and the connections. So what we're doing, we're in the process of raising equity at the moment. We're working on a 15 million raise into the umbrella business. And there's essentially a number of parts to what we'll do. Part is a crowdfunding and sourcing platform called Big Crowd that is designed to find game changers and support them with the potential with the funding and collaborative support that the crowd can offer. There's also a platform called fundingtheglobalgoals.tv. And all of these are part of a bigger vision to then create what we call this Sustainable Innovation and Development Bank. If you take a look at the transformglobal.co website, you can learn a bit about the vision for the bank there. But it's a cross between what we call a multilateral development bank, like the World Bank or African Development Bank. Think of a commercial investment bank, and think of a old-fashioned merchant bank. And that's the best way to get this into your mind's eye. And ultimately, what we've devised is what we call the SDG 360 Game Changer Fund. And this would be what we call an extended and blended capital fund that can invest early, mid, and late in one fund structure. And it would be very large. It would be about 9 billion sterling if we can pull it off. And one of the key aspects of the fund is designed to be a vehicle that would list on mainstream markets, and where that 9 billion or so would come from mainstream institutions. So it's not a retail fund, and it would list within a period of time, specifically to address the access to capital and the capacity building challenge. I'm not going to go into much more detail on this call. I just wanted to give a very quick overview, and I'll be doing webinars and other maybe I'll host rooms that are exclusively about Transform Global. But this is more about the broad system innovation we need, and that includes things like creating shared risk mechanisms, utilizing some of the multilateral agencies and entities far more than they're being utilized at the moment. Creative, innovative structures so people can share risk on an individual or a venture basis, and where we can really add value, help and support. It's not just about the money, it is about the organized help and support that goes alongside the money that entrepreneurs need. And it's not unique to Africa that people need help and support, but I think in some areas where infrastructure is not yet built out, and where skills need to be although there is an incredible talent base, we also have to realize there's a mindset change to innovate with capital and intelligently with that capital to make this work. So that's just enough for me for the moment. What I'm going to do is just go very quickly round to the people who've already come up onto the stage, to Chantal Soy, if I'm saying your name correctly, and Ifanye. But please shout at me for getting your names wrong. So we'll go quickly to Chantal. I'll go quiet for a moment, and thank you so much for listening and for joining.
Thank you, Steve, for obviously highlighting what it is that you're doing. And SDGs, just to be clear, I know them as Sustainable Development Goals. Is that the same thing it's in reference to here? Just to check.
Yeah, absolutely. So the UN came up with a list of 17 Sustainable Development Goals, correct. Absolutely, the global goals. So yeah, they.
That's right.
Sorry, Chantal, can I just say, if you would, give us a very quick, detail of your own background and what you're doing, but also, what I'm trying to do and what I wanted to do on this call is really get people's feedback on what they think the funding gaps are, and the
Yeah,
systemic ways that they think that these can be addressed. So that would be
yeah,
really great.
totally. Yeah, okay, perfect. Well, I'll just kind of give you a brief kind of outline. So, my name's Chantel, and the name of my company is the Good Coffee Project. And I actually do not drink coffee. I'll just start out there. Um, but I have been incredibly, how can I say, motivated to look into the supply chain of coffee in regards to how people, well, farmers essentially are treated within the supply chain. And for some reason, it's just been something that I have been so driven to um, explore that I've kind of made it a personal mission of mine to get the answer to the question in my bio, which is, why are coffee farmers so poor when they are part of one of the largest markets and most commonly traded commodities in the world? So for me, that's a real question. I've found that by putting this question in my bio has given me, direction when I'm going into rooms. It's given me clarity in terms of what it is that I'm looking for, and it's enabled me to be, very focused. And I found some of the most amazing conversations. I mean, in reference to SDGs and the United Nations, I've been in rooms where, like green tech, agri tech, blue tech, clean tech, sustainable rooms where, you meet a lot of people who have sustainability at the forefront of what they're doing. So I've decided to put the Good Coffee Project together as I want to say as an impact-driven business that really wants to kind of, get the answer to this question, and not only, highlight that there is a problem, which is that, the fact that these coffee farmers get paid, well, if they're lucky, they get paid at all for the work that they do. So essentially, it's part of a modern day slavery trade. And like many commodities, and when it comes to agriculture, there's at least 70% of the working population in Africa, is supported by the work that farmers do. So essentially, there's a lot at stake, and ultimately, there's if we're going to do the numbers, there's 1.2 billion people in Africa. And one thing that I've really been driven towards is, seeing if there is more that I can do as someone with the knowledge that I have. I mean, I want to say my main background is in accounting and finance. That's what I studied at school and done a degree in, and came out with, good grade, a 2-1 in that particular field. What I did find is that the work that I was doing killed my creative passion to the point where I felt that I couldn't be creative at all. And I find that with this particular business, I've been able to not only kind of pursue, creative kind of outlets, but I've also been able to kind of work with the logical side of me that just wants to be balanced and, get results.
Chantel, can I just I want to bring it back to the question, the title. I want to be a little disciplined here, because it's really about how can, and I really applaud your mission, and I'd like to say I fully understand the problem. I've got an insight into the challenge, the fact that fair trade is something that attempted to reset the balance a little bit and get more of the capital, more of the proceeds to those who are producing, rather than the many in the chain. And I think there's a number of ways in which this will occur. I think responsible aggregators that are cooperatives and that are really operating collectively and scaling, I think, is one way. Also using technology There's someone who I don't think is on tonight, but I've known her for a few years, and she's doing some really exciting things with blockchain in Haiti and other places, where it's really providing a mechanism to provide provenance, to understand the supply chain, to ensure that the producers are getting a much fairer share of the ultimate sale price. And that's occurring. That's agriledger.io if you've not heard about it. But Chantal, just to keep it really, really quick, because we've got many things to cover tonight. And this is, I hosted this room with a similar title just a couple of days ago on Tuesday, and it was phenomenal and it was broad ranging. So I want to thank you. If you've got any feedback in a moment, just have a think through. The question is, how can we change things? How can we get capital in the hands of those who are going to deliver the most impact? So for the moment, I'm going to go to one of the others on the stage. Soyi, is that correct? Am I? Or Chantal, did you want to have a comment?
Yeah, no, I was just going to comment and say, if I can be, quite quick about it. I think meeting people where they're at, because not everybody understands finance in the same way, as I may do, or, another person on the panel. So I think just meeting people where they are, and these standards and things that you have to have in place may not suit everybody based on where they're at, especially if you're trying to reach different demographics. So that's just my input there.
So just to add to that as well, this is a small comment, but it's actually very deep, because in so many areas where companies fail in this, it's not their direct appointments and their direct supplies. It's they work with a company, they see the factory, and they don't know that there's another factory going on where less acceptable practices are going on. And companies really need to look to their suppliers, and they need to audit them, and they need to do a sort of an SDG audit, and they need to get in close. And when they see that they've got an order for 100,000 units per month, and they go to the factory that only producing month, then you need to bloody well check where the other 40,000 are coming from. And I don't think that happens enough. And so, just picking up on Chantal's point, you need to be there.
100%. I mean, I believe this can't be done from afar. It has to be done with a local presence. Absolutely. So when you said, you've got to be there and meet people where they are, I think Chantal also meant in terms of their understanding of finance, as well as actually, the pure business process. I'm not sure whether that's correct, Chantal. You can correct me if that's not.
Yeah, no, I think that was it. I mean, it probably has a profound meaning on both levels. I mean, presence is one thing where I think understanding is for me where I feel that needs to be met, because it becomes rather robotic and not lacking compassion when people are investing this capital into the communities that they say that they want to help.
Right. And part of that, and this is really coming onto it, if you look at there's many forms of capital, many forms of investment, and impact investment is really something that's emerged really over the last 10, 12, 13 years. The theory is that social and environmental returns can be generated alongside financial returns. And sometimes those financial returns are not market, sometimes they're below market, and sometimes they're above market. But the definition of impact is really about targeted and measured impacts alongside those financial returns. So what Stephen talks about is absolutely right, the audit. And sometimes the audit can be really expensive. So the key is making sure there's other efficiencies in the business model that can pay for that level of responsibility. And it really is about investing on a human level, and recognizing it's not just one thing. It's not just about coffee. It's about soil, and it's about water systems, and it's about the energy and mobility to get the product to market. So this is the issue. It really isn't about a singular investment. It's really about taking best practice and replicating best practice, including very much the human side of things and getting people on board. There was a lady I was privileged to meet in 2012 who's called Ella Bat, and I was at an event in Sweden, and she and I traveled back to London on the same plane, and we spent time a little bit in the event as well. But this lady is remarkable. She was a lawyer, and she created something called SEWA, SEWA, the Self-Employed Women's Association in Ahmedabad in India. And the thing that she managed to do is take an awful lot of piece workers who were suffering the middleman problem. Often they were using sewing machines that they were rented for life. They never got to own them. They paid way more than the cost of those machines, way more. And they were really indentured slaves. It's as simple as that. And what she did is she managed to organize them. She used technology, she used advocacy, and ultimately, well over 1 million people, this lady managed to organize and help take out of poverty. And she also, it's really about giving people the ability to have their own, to set their own destiny, to participate in that, rather than the imbalance of power. And that's a big problem with the investment world all over the world. I think many in the audience who have knowledge and understanding or deep knowledge of the continent know that there is a power imbalance. And for change to occur all over the world, Africa, but I'm interested broadly, we have to reset that power dynamic. And the human capital is just as valuable as financial capital, if not more so, a great deal more so. But we have to get more of it in the hands of those who are counting. So can I just, thank you, Chantal. Can I go to, next on the list is Soyi, if I'm saying it correctly. And maybe you'd like to you can give us your feedback, brief bio, and where you think system innovation is required and where the gaps are that you've seen. You're either on mute or yeah, okay.
Thanks, Steve. Yeah, so I work in the Africa power space. I work for one of the international investors in the Africa power space. So I'm going to answer your question or share my thoughts in the context of SDG 9, which is looking to improve infrastructure, innovation, and industrialization in Africa. And I think a key component of that SDG, and I think right across most of the socioeconomic targets to be achieved in Africa, is focused on creating, or rather reducing, the electricity deficit in sub-Saharan Africa. And from my professional life, I see a trend where you have big deals that get closed in a number of jurisdictions, typically Nigeria, South Africa, maybe Ghana, Kenya. So those are the big countries in the economic regions. And then there's a lot of fanfare, and then it takes 5 years or sometimes 10 years before a deal of a similar size gets closed in those markets. So there's a very lumpy pipeline. And what is happening is you're seeing a lot of business developers, the entrepreneurs who want to develop projects in the power sector. But for some reason, those projects or business plans or early stage developments never quite translate to financial close or actual power plants that then get translated into megawatts in people's homes. So I think a big gap from an SDG perspective in Africa is finding a sustainable way of seeing projects from paper, business plans, through to actual bricks and mortars, and then that going into innovation, whether that's using IT or going into infrastructure in terms of homes, hospitals, schools, lights being on, and industrialization. You can't have manufacturing without power.
Right.
So there are a few sources of funding into the power space in Africa. You have the DFIs, you have the private equity firms, you have commercial banks, but they each all have their drawbacks. So I don't know, maybe this fits into what you're trying to do, but I think a useful intervention into the power supply chain or procuring power projects would be having a financial institution that in a way blends the positives and advantages of the different potential financiers. So the DFIs have patient capital, have concessional funding, but oftentimes they're quite bureaucratic and maybe come with a somewhat political quiz.
I mean, just on this, just briefly, they've got a mandate, and they are typically very siloed in their geographic coverage, but there's often many that overlap and cover the same area. So you've got the World Bank, and their private arm is the IFC, and then you've got the African Development Bank, and countries will have their own, and Britain has what was DFID, and I forget its new name, but all of these players can play a part, but the problem is the money is typically siloed and it is cherry picking. So it's wanting things that are investment ready. I have a statement. If anyone's heard me on here, if anyone's heard me on here before, you'll know I use this statement a lot, but it makes sense. And it's, you've got to water the root to eat the fruit. And the fruit for those many investors is what they call investment ready deals, things that are that look like they want, that are properly permitted, that have teams that are have already worked together and already successful. In many cases they want things that are already operational, that are already delivering EBITDA. So the reality. So the reality is, thank you. I'll let you finish, but I just want to make the point. So the reality is that institutional money from whether it is institutional investors in China or the West or wherever, ultimately it's got to come in responsibly with the kind of human understanding and governance that we were talking about at a different scale, but with Chantal and Stephen. It's got to come in, but it's got to come into projects that have already had that capacity building. That's how it is right now. Whereas actually, I believe there's a way of doing that where you aggregate money from many different parties to pay for essentially that pipeline development. And it might be 30 projects are looked at the same time and 15 go into an intensive incubation and development and acceleration sort of facility, a live facility, although virtual is great. There's nothing beats actually being together in one place for a little while. And that is where investors essentially can get a great deal of understanding of the people, and the people can get an understanding of what the investors are seeking on the other side. And when you add the right level of consultancy and the right level of help and support, and you pay for that and do it for many at the same time, it becomes like a sausage machine, but with ethical, intelligent sausages pumped out the other side, which is investment-ready projects. I also think it's necessary to be able to do that. It's not just investing at that seed stage or project or infrastructure early stage that works. I think it's necessary to do early, middle, and late in one fund type. So it becomes an active ecosystem that there's a lot of failures at that early stage, and that's okay because you actually reap the rewards at the later stage investment, and that works for energy, or it works for tech, or it works for coffee, quite frankly, because most of the time we're reinventing the wheel unnecessarily. So sorry, just could you tell me how you say your name and just make a comment to what I've just said?
Shui.
It's Shui.
Yeah.
And do you want to just kind of respond to what I've just said?
Yeah, no.
And finish making your point, sorry.
Yes, I agree. I think it's essentially finding a way to. I agree with the point you made about the World Bank IFCs of this world wanting to come in at the the choicey projects and the ones that, and everyone seems to want to go after those big marquee projects, but that's not enough to have a sustainable growth. So I think if there's a way to find a funding solution and operational commercial support for projects that maybe are not the chosen ones, and maybe reduce that threshold and get more projects through, then you start to see a lot of progress in the power space. And I think that ecosystem is what we need, rather than having anointed marquee projects and everyone chases after that. And the irony is that 5 years after those marquee projects close, you don't see new projects, but what you see is secondary M&A transactions, refinancing solutions. So people would continue to do deals off the back of these marquee projects. So we almost need to flip the script.
And providing, the sustainable credentials. I mean, this is about the SDGs, and power is a sensitive subject because clearly, people need energy for construction, for manufacturing, for all manner of economic arenas, and ultimately some renewables don't have the density to support heavy engineering and certain processing capability. So the key is really, where fossil fuels are used, really using them as efficiently as possible and getting the optimum mix. But for me, my goal is really to get the world on renewables as fast as possible, because climate is one of the key issues I care a great deal about. I'm sure many people in the audience do as well. So we have to be really, really careful that we're not, changing the investment landscape to give us more of what we don't need. That said, we will need fossil for some time until the capacity is there in renewables and the density and capability. So just wanted to make that point. But just to keep it fresh, and forgive me, and please comment. And if people want to follow up either on LinkedIn or Twitter or my email, take a look at my profile, and follow up with comments or at another time, please do so. But I'm just going to move on. So, and then if Annie and Rachel, and then we'll reset the room after that.
So sorry, I've just got to cut out here. I've got to shoot now, but thanks for setting the room up, and thanks for everyone for joining in. But we'll definitely catch up again. Cheers.
Thank you, Stephen. I really appreciate it. Thank you.
Hey, Steve. There's always, for non-Nigerians, there's always an issue pronouncing my name, so you're fine.
Great, thank you. So, so where are you from? Well, you're obviously Nigeria, but whereabouts?
I'm currently in Omaha, Nebraska, and in Nigeria. So I'm from the east, southeast, Anambra State.
Okay.
And and the topic of this room is something I think about on a daily basis, and I come up and devise solutions for. So I'm an investor starting off. I'm still at the very early stages, but I founded a company called Waltoria, still at the very early stages as well. And what we're looking at, first of all, we understand that for a project like the ACFTA, for that to be successful, there has to be a deeply rooted information infrastructure across the continent. Not only in a specific region, it has to be integrated. For example, an issue of how goods can, the safety list, the tariff laws, that if a good is produced in Africa, it can cross borders tariff free.
Right.
For that to work, you need to be able to track these goods from South Africa to Nigeria to Ethiopia. So with that, and along with a whole suite of things, Waltoria, what we want to do is we want to build an exchange, not an exchange from the regular sense, like a New York Stock Exchange, but a new generation exchange built on a blockchain, where information services can easily be traded and transferred from across funds. So initially, this first proof of concept is essentially a marketplace for funds that are investing locally within specific regions or across Africa. So you can imagine a situation where, let's say, a group of 50 private equity firms or SDG funds in Africa can tokenize their LPs and make it available on the fund. They can use the platform to raise money, and the funds that the projects they invest in, they can also tokenize those and have it in their portfolio for both the primary listing and the secondary listing, alongside other information sources.
It's interesting. I think if I can just jump in, I think the potential of tokenization is just massive. You know, people do want liquidity, you know, and they want the ability to have a share roster or debt providers spread broadly with, you know, the potential for smart contracts that makes the transaction, you know, automated in many different ways. Clearly, smart contract in law, we're not quite there yet, but I think over the next 2 to 5 years, although the pandemic might have slowed things in some areas, I think it will change things in others, and massive efficiency innovations are there that could change how capital flows. So I'm with you. I think it's a really, really important area to focus on, and having an exchange. Just very briefly, you know, how will the exchange work? What's the mechanism? What give us an order? At what level will people be investing, or funds or institutions be investing? What sort of?
Well, so there's multiple ways that can be. It's sort of like a mix between a centralized and a decentralized platform. Decentralized in the sense that these new investment banks, in a sense, loosely, because you're going to have institutions that are tokenizing, be it the funds or underwriting the smart contracts, or tokenizing the companies that are being invested in. So those are going to be the central liquidity providers, the brokers, alongside other information sources like Oracle services. You can imagine a constellation of, and this is 20, 30 years down the line, a constellation of satellites, or just a specific group of satellites that are connected to this network that sends satellite data for agricultural uses to the network, that updates, that can be tied into insurance contracts. Insurance, for example, if there's a bad yield, the contract deploys automatically, or can track goods.
Very interesting. I was talking just a few days ago with a gentleman who works for a UN-related agency in Geneva, and really it's satellite data globally for how the world is changing. Is really what they specialize in, and work with many other agencies and many other entities. And this is really interesting because, you know, ultimately the insurers can tap into that data. It can be utilized on a localized basis to kind of get ready for storms, to track water patterns and do other things. So really,
absolutely,
really interesting. Ifeanyi, I just want to, we've been going for 3/4 of an hour. I'm going to go for a couple of hours if people wish to be here for this, but I just want to make sure that we've got enough people contributing. And again, the subject matter is system innovation and finance to fund the SDGs in Africa and around the world. For those who've just joined, I'm Steve Podmore. I'm the founder of something called Transform Global. I'm working to create a platform and a bank, basically. We call it a Sustainable Innovation and Development Bank that is all about addressing the global goals at scale and speed all over the world. It's really about creating funds that are fit for purpose, that can tackle the access to capital challenge, and platforms, and also the mechanism. If you take a look at the websites, you'll also see there's a special opportunities fund in the structure for what we call the SDG 360 Game Changer Fund. And that would be investing into other things like the platform structure that Ifeanyi is talking about, because I think when we capacity build on what we would call a macro level, you know, ultimately the coffee farmers that Chantal is working with and others, ultimately they need to be getting capital, but for that to be enabled on a systems level, we need to create these new fund structures, new platforms, new initiatives that can collectively do this. So small impact investors are doing great things, but unless we can massively scale up, we're never going to address the problem. So this is what I'm talking about. So if Anya, if you've got any quick response, please make it, and then we'll move to Rachel, and then we'll have we'll reset the room, and anyone else who wants to come up, please put your hands up, and I'll put you in the queue. So if Anya, just closing words, and then to Rachel.
I 100% agree with you. I'll just pass the mic on to Rachel.
Right. Thank you so much, Ifanya.
Yeah. So I just have a quick question.
Sure.
Because Suyi, you kind of alluded to it a little bit before, but I'm just really curious as to what you guys think about the law or the legal side of this and everything. I'm in America, I'm American, currently in Iowa, and just thinking about like U.S. relations with African countries and just having those good ethical lawyers to make sure that these business deals do go through, making sure that things do get taken care of. I know this is primarily about finance, but I think that people would be more likely to invest if they knew that the legal side would be taken care of. So I'm really curious as to your thoughts on that.
Yeah, it's a great point. And anyone from the audience,
Rachel,
please.
I happen to be a lawyer, so maybe I could chime in on that.
Please, I was going to say if anyone from the audience wanted to take it, but sorry, please, you go first.
Sure. I think if you're looking at international investment into Africa, you generally have international law governing the documents. So if it's a loan or a private equity transaction, it typically, depending on where the investor is, but if it's an American investor, you might have American law. If it's an English investor, you might have English law. There are certain instances, and in those scenarios, you have international lawyers as well as lawyers in the relevant African jurisdiction. Very quickly, there are certain instances where you need to have the local law. So if you're buying a property or your investment is in relation to national assets like an oil and gas deal or state or government property. But my experience, and I spent a year on a secondment in Nigeria, is you have very high caliber lawyers in the relevant jurisdictions, and pretty much the top 3 firms in most of the jurisdictions are just as good as in New York or any other jurisdiction. And the reason being that a lot of these firms recruit from Wall Street firms or from law firms in the city. So with transactional advisors, you have the representation and the support you need. Where the challenge is with the courts, are they sufficiently independent, and are they sufficiently dynamic to ensure contracts are honored? There is a risk, and it's on a country-by-country basis, and investors typically mitigate the risk by agreeing to resolve disputes by arbitration. So you have international arbitration in Paris, in London, in New York, or in certain jurisdictions in Africa, like in Lagos and maybe Nairobi. So you look at it from a transactional perspective, you're covered. In terms of enforcement of judicial decisions, you also have the UN Convention that guarantees enforcement of international arbitration. And most of the African jurisdictions are signatories to this convention.
So can I ask, is there something to do with the British Commonwealth? Is it parity in law for Commonwealth countries as well, using a British based legal system? That's right, isn't it?
Yes, that's correct. And in Francophone Africa, you have the OHADA, which is consensus of laws or synchronization of laws in these jurisdictions. So I think the bigger concern for foreign investors is, who you're doing the deal with, and making sure they're not politically exposed persons. Because if you have a politically exposed person as a counterparty and, things don't go so well, then there might be some, justice might not be denied. Justice might be denied, or the courts might be slow. So that's why people favor arbitration. I hope that answers your question, Rachel, but happy to provide more information.
Thanks, Soye. Rachel, do you want to respond? I would also just add briefly that I think it's important to recognize, again, if we're going to scale up all over the world, we need to increase capacity and depth. So that includes in the legal profession, but also in the policy arena as well. And that's where I believe what we call big impact game changers. There are policy initiatives that can change and simplify structure, property rights, blockchain solutions can help with that, an identity. So ultimately, there's ways, and company formations. I mean, the law is and the policy around company formations and bankruptcy law, is very, very important to innovate. Now, I'm not the expert, clearly, but my point is that there's many people are, and they're scrabbling around for money, and often they're the ones. They don't just need money; they need help and support to create a system that can be replicated from country to country or across countries. And someone mentioned, Fanye, I think, mentioned borders. Cross-border trade, mobility. It's all part of the issue. So it's really about organizing. And I believe, for that, we need centers of excellence dotted all over, over the continent that are funded properly from a policy and a strategic perspective. And investors, they need local partners. If institutional capital markets are going to be opened up properly. I know someone who used to be the head of PIC, the Pension Investment Corporation of South Africa, and he's on the board of the Global Compact, quite a remarkable individual, Elias Masilela. And, when you sit down and talk with Elias, it's really clear that there's a huge amount of money, and there's a huge perception issue because that could be amplified very significantly. Anyway, I want to reset the room if that's okay. So unless anyone who's up now has got anything pressing to say, please raise your hands, and then I'll put you back into the audience and invite a few others up who might have something to say. So please, if you've got anything, you've got a few seconds to respond. Chantal, do you want to?
Yeah, just to kind of add, I definitely am keenly interested in looking into the innovations and how we can actually help. If I can add like a last thought, it would be that essentially, if we are to kind of benefit from these innovations, then I think the way forward is to actually, the people who might benefit from this funding, it would be a good idea to maybe have a good understanding. I use the word understanding again, but, to kind of really get into, understanding the mindset of the person that you're working with. And I think you have kind of made that point, but I just really want to make that point clear again, that in terms of like the meeting of minds, and I think you've referred to, development, maintaining the original ideas that have been established and working with them as far as possible. And I think there's a lot of innovation to be had, and I think that's constantly evolving, and getting people to understand things, a level playing field as what's happening a lot in these rooms and on this platform, which is Clubhouse. So, fantastic. Thank you very much, Steve.
Thank you, Chantal. Really appreciate it. And to be really clear, although I'm thinking, and though our plan is to create the bank that will create fund structures or help launch other structures and platforms, the key is ultimately addressing this access to capital problem. But it is about putting in an awful lot of help and support and doing that in portfolios, not on a piecemeal individual basis. It's really important that the people are also have standards of behavior and are really incentivized, yes, but they've got to be driven by the desire to deliver positive social environmental impacts. It isn't just about the money. It is about, the value that is delivered broadly to society and solving problems. So that really needs the human factors, the training and the education. And that, frankly, is where innovations in how funds are structured and how they're created, which I've mentioned. I don't want to go over it too many times, but by doing it in the right way, larger funds that can invest from early, mid, and late, that kind of fund, you can add a great deal of help and support at the early stage, knowing many might fail or many might not be scalable. And that's entirely okay, because by doing that in these larger portfolios, and you need scale to do it, what you're able to do is discover those that generate the returns to pay for the rest. But when you look at the social environmental impacts, they can be simply massive. And a big part of this is about creativity. It's about media. It's about storytelling. It's about culture. It is really about, enabling people to be who they are, and having rich, vibrant economies is about hope. Hope is the opposite of hopelessness. But for hope, people need to know that there's investment and help, and that they might be okay if they fail, because that's another part. We don't want stigma. And this is where the law has to be relevant, because quite frankly, failure is okay. It might be the second or the third time you get up that you succeed, but the key is attitude. And if you're devious and trying hard to hide what you're doing, then that's not great. But if you're transparent and if you show the right attitude, then failure is a good thing. I'm going to just invite other people to join. Thank you so much, Chantal. Ifeanyi, sorry.
Thank you so much, Steve.
Thank you.
Yeah,
Chantal, go on, please.
To add before. Yeah. So it was that basically Africa is really, for me, the heart of the world. And I think that the more that we can kind of get behind it, on a harmonious mission, and, really seek to put the people at the forefront and really turn these industries on their heads in terms of reference to that power struggle, I think it would really kind of bring about a lot of the innovation, within those few moves alone. So, thank you again for the stage. We really appreciate it.
Okay.
Thank you for the stage as well, Steve. I'll connect with you offline on Twitter.
That would be great. That's fine.
Thanks,
on LinkedIn
Steve.
as well. Thank you, Soyi. Kimberly, I'm going to welcome you, and maybe you can give an introduction. And what I'll do in a moment is reset the stage again in a moment. But first of all, if you'd maybe introduce yourself and maybe comment on what you've heard so far.
Well, actually, I thought you were about to reset the stage and then I'd come up. So I think that you should do that and then let me come in the fresh.
Sure. Okay.
I want to go with what you're designing, and then we'll go from there.
Sure. Okay. Well, fine. That's great. Yeah. Let me do that then. So, but hang on there. Maybe mute yourself for a moment. Hi, Rob. If you'd like to come on and speak, or Robin, other people, if you'd like to come into the stage, please put your hand up, and I'll come to you in a moment. But first of all, I'll do that reset. So, the title of the room, Systems Innovation in Finance to Fund the Global Goals, or the SDGs. It was going to be in Africa and around the world. But because I'm recording this, and to be clear, this is being live streamed on my YouTube channel as well, for really so that, and it's the first time I've ever done a live stream, so forgive me for getting it a few basic little mistakes. So because we needed to put record in the title, we missed some of the things. So it's not just about Africa, it's about around the world. So I'm Steve Podmore. I'm working to create what we call a Sustainable Innovation and Development Bank. It's been a very long journey. I've worked on this idea in since November 2006, and it's had many iterations and many stops and starts, but finally it feels like it could be coming together pretty quickly now. And the concept quite simply is we need to innovate massively in finance, system innovate in finance, to be able to address the Sustainable Development Goals. We have to address the access to capital or capacity building problem. That's what I believe is one of the most important issues the world faces. Ultimately, there's a statement I just used: you've got to water the root to be able to eat the fruit. If you don't do that capacity building and root watering, i.e. get capital and help and support to those that need it and have the potential for amazing impact and do that more systemically, then the follow-on and later stage investments will never go. And what we're trying to do, we're brokering, we're cherry picking, and it's almost like Tinder. We're swiping left or right very quickly, but we're not building, or investors are not building deep relationships because not everyone is investment ready for them at a particular time. So what I believe is the kind of system innovations that we require include creating fund structures, what are called blended and extended. And this means where you pull capital and guarantees from different parties who are traditionally very siloed. So that could be the multilateral development banks, serious philanthropists, governments, etc. And with the benefit of those guarantees, it can crowd in a great deal of lower cost capital. So when you create what's called evergreen fund structures that are permanent capital rather than a 10-year fund and structure of venture or venture capital or private equity, it has a dramatic effect on your ability to take a lot more risk early on. It's a lot more efficient. But the key is not just cherry picking late stage projects. It's very important in an organized fashion to do volumes of early stage. And that could be, depending on where it is, it could be $500,000 or $1 million first check, and add help and support, organized help and support in many areas, in legal, in tech, in strategy, in communications. And then what that enables is the discovery to do multiple follow-on rounds. So that's part of the design. You can read about it on the transformglobal.co website. There is two other parts to the project. One is the fundingtheglobalgoals.tv, which is all about a media platform, think Bloomberg or CNBC, but to provide education and inspiration and understanding, and particularly shine the spotlight properly on the system innovations that we're talking about. And another piece called Big Crowd, which is about collaboration and funding with the help of the crowd to find game changers and find fund and support them. So that's basically what I'm working on. The fund that we've designed, if it can be brought to fruition, it would be a 9 billion sterling fund. It would operate around the world, and it would operate and it would invest into other fund structures as well. That's a very large number, but there's many reasons why I believe it can be delivered. You're very welcome to see the YouTube channel where you can see some lengthy but comprehensive videos on how we believe that can be pulled off. And where I am right now, I'm in the process of raising 15 million sterling of equity to be able to bring the full project to fruition and then go through the multiple follow-on stages. So that's my quick reset. I don't want to go into too much detail. We welcome Yem and Alfredo onto the stage, so thank you for coming on board. We'll go to Kimberly first of all to have a little bit of an intro and a comment, but the key is understanding, and this is what I'd like you all to comment on, is understanding what you believe the gaps are to be able to fund the SDGs and how we can fill those gaps and widen the bottlenecks through that level of system innovation. So Kimberly, over to you.
Thank you, Steve, and thank you for this conversation. First, I'll back up and tell you a little bit about how I come to this room. My name is Kimberly King, and I've been part of the SDG story when it was the MDGs, the Millennium Development Goals, that came to fruition in the year 2000. And I watched the birth of that process as the entire the leadership of the world came together to create some global goals. And 15 years later, it was the sunset. And obviously, we had not solved all the world's problems. So the SDGs were born. And what's been exciting about that long lens is watching this go from maybe a very small percentage of people in the world, in the development community and in the United Nations community, and a hard time getting awareness and adoption in the larger arena. the SDGs began to usher in a new day of participation, technology. I think it's the perfect storm for the perfect storm. And that's why maybe we're about to do some things together that have been tried. The things we're describing have been tried in many iterations. I know because I've been part of them. But I also know that we had hurdles that were bigger than we could overcome of just readiness and critical mass. That part has changed. I had the opportunity to work from the smallest end of the spectrum with microfinance and micro enterprise, especially with women around the world, like the sewing operation and the women's employment that you talked about earlier, Steve. So I've done that across Africa, India, and Bangladesh. I've also worked at the other end of the spectrum with large-scale public-private partnerships and funding, and then with the ESG and impact investors. So I really work in the innovation ecosystem area and collaborative ecosystems, collaborative innovation, which actually seems like it would go together, but they don't automatically, even within that kind of shared value system. It's so siloed as things are.
Can I just say, I was on Kimberly, this is amazing. And I want to say that there's a platform called Run the World. And if anyone has been around the SRI or ESG space for some time, there's a gentleman called Robert Rubenstein who founded something called TBLI many years ago, and it stands for Triple Bottom Line Investing. For those who don't know, and it's an events and a consultancy business, but now they're online for the moment. Anyway, he was doing an interview with someone who's a long-standing impact investor, good friend who I've known for many years, Audrey Sellian. And it was a great two-person interview, and a group of us were watching in. But what Robert was saying is something I've directly experienced myself. And this space, you would think, the impact and related space, you would think it would be highly collaborative and where everyone would want to help each other, and really people would put their heads together, and where, 2 and 2 is not 4, it's 22. And the reality is far from that, or that I've experienced that. And I guess that's the question, Kimberly. How do you incentivize people to really put ego aside, put their own siloed or foe that they're working on and spending their time in? How do you get them to look wider and see, how can I be part of something bigger that can work for all of us? Just want to throw that in. Your experience and your background is amazing, and there's so many questions I could ask, but that's the first.
Well, I think that I'm going to call that the 8 billion person question. That I live in that question every day. People in this room right now, and in many rooms I'm in, that I think are amazing, but they don't collaborate. They talk about collaboration, but they don't. And in case you can't hear it in my voice, I'm a pretty forthright truth teller. And part of how I incentivize is that I bring that elephant right in the room, and I invite us to understand what it is that's holding us back in the circle itself, because the world needs us and is ready, and we're ready, and that's the last mile is our own. I think our own is in the way.
And I also believe it's about how we incentivize the smartest minds in the world, rather than going and being rocket scientists for hedge funds. And sometimes there's value in that, and that's okay. But we really have to incentivize people to come and create the right fund structures, the right mechanisms that almost force collaboration. I think, there is it is a pay-to-play world, unfortunately. And if we can create the structures that get people talking and get people understanding and taking those first steps, I think it can go a long way. And that's part of the design for Transform Global and the SDG 360 Game Changer Fund, which we can talk another time about. But the key is making the carrots big enough so people, sit up and take note. And ultimately, unless you can pay to play or pay for them to participate initially, people go on their own route. That's unfortunate. But Did you want to say anything about where you think the greatest interventions and the system innovations can be? Would you like to mention that just briefly? And then we'll go to Alfredo, Rem, and Bjor. Welcome to the stage. And you're a newbie, just like me. I'm only a week into my Clubhouse experience. So also please forgive me for anything that I'm for the mistakes that I'm making. Also, just to be clear, we are recording this, which I have to say, and it is in the title. So we're live streaming it. So to Kimberly, please continue.
Well, some of my lab work I do at my institute called One Island Institute. So it's a collaborative environment to where we are convening across sectors and then telling the story. So adding the financial and the investment side, the innovation and entrepreneurship, education and training, and then how do we create a support system for that and how do we tell the story? So all the components that you're naming, first of all, I'm a strong believer in that they all must be there and that they are all part of the puzzle and they create a cohesion. And the bottom line that you're pointing to, Steve, is absolutely right. What has not been true in the past is to align all the incentives, to align the motives and the motivations and not have them directly or indirectly cancel each other out to a zero-sum game. That working on that bottleneck itself and bringing the right players together to work that through, maybe not globally at first, but I do that project by project because we build the model by becoming the model and always build it for scale. So I think there's a lot more in this conversation I'll hold for now, but as you can tell, I'm passionate about this conversation.
I love it, and I appreciate it so much. It's build, and I just want to pick on one thing you said right at the end. You got to build for scale. I think that there's a big problem with the space as well, and that is people have been almost battered into submission and can be very apologetic. And that's why many of the impact funds are quite small, although there's an awful lot of public market equity or public market impact investment, and that's growing very, very quickly. The deal flow and the product and the opportunities at the other side are very limited, partly because, there is a mentality. Sometimes it's charity and aid is clearly valuable and important, but it needs to be more businesslike and social impact and hybrid enterprise. But even those who are doing it, it's almost like they're afraid of because they know getting capital is so difficult. So they kind of scale back their ideas as opposed to scale them up. And in order to build and design for scale, we've kind of got to go beyond that and look at the system design. And can you replicate through a franchise model, or can you, have a core technology that has distribution to the far reaches? It doesn't have to be always build a mega company. It could be aggregating agriculture or doing something and replicating what Ella Bat did with Sewa. But ultimately, we have to take best practice and get super ambitious with it, but also leave the space for new ideas. I'm going to go to Alfredo now, and thank you, Kimberly. And then we'll go to Yem and to Bjor. And please, if you're in the audience and you've got something you urgently want to say, please put your hand up and we'll invite you in. But Alfredo.
Thank you for inviting me up. I was going to just kind of throw out there, back in the mid-2000s, I was working with the ASEAN finance ministers to create a regional development bank or infrastructure development bank in order to focus on infrastructure investments in the region. I think what you'll find with a lot of these multilaterals and actually a lot of these countries is that your sponsors or your donor countries are going to not get the majority of the benefits of those who are receiving the investments. So you have to find this win-win solution. I actually think, SDGs would work very well in setting up its own multilateral bank, where, they take on a lower return spectrum and help to create this AB loan structure as well, similar to the IFC. in different project scopes.
So you mean the UN
that
itself?
Would then bring in. No, IFC. The IFC has the AB tranche loans.
Right.
So
sure.
It's not you. It wouldn't be the UN. It would have to become. Here's what I would think, right? So you can potentially set up a fund co-branded with the World Bank. And we did that during the global financial crisis. I was working with the World Bank to create a trade finance fund in order to unlock the freeze in trade financing during the global financial crisis because no one was lending. Similar in this instance where you could work with the World Bank to try and get a co-branded platform. So then you can then borrow at the AAA rate from the World Bank, and you pay them a branding fee off the equity that you would be managing from it. And you would be getting AAA financing, hopefully, depending on the arrangements. Say a 5-year note, 10-year note that the AAA, that the World Bank would issue in the markets in support of SDGs.
But Alfredo, I'm not sure whether you heard me earlier, but that's the concept. What I believe is we need what we call blended and extended fund structures, evergreen fund structures that are essentially permanent capital vehicles. And we're talking about there's many forms of finance. There's debt, there's equity. You're talking about the debt side and trade finance. And clearly, pulling the multilaterals, not necessarily individually like IFC, but multiple. There's about 270 multilateral development banks or development finance institutions, around the world. And as you may know, I'm sure you know very well, they're very, very siloed, and they need intelligent intermediaries. So on the fund structure we've designed, it can be done as a pure equity from mainstream institutions and sovereign wealth funds. What I believe can happen then is it can become more efficient and more impactful when you add the kind of leverage that you're talking about for certain thematic and geographic activity. And for sure, this is a huge amount of money that makes things more efficient. So the help and support that Kimberly was talking about, and Chantal earlier, and others, and I've mentioned, the key in making that available is being able to pay for it by the returns the funds can make at the later stage. So essentially, this is, if you're familiar with the work of Mariana Mazzucato and the role that the states and governments and also philanthropists have in creating social change and technology, often they're putting in that money, but not always receiving the benefit directly. Indirectly, yes, but not always directly. So I believe the structures, and that's the idea of creating this cross between a multilateral development bank, a commercial investment bank, and an old-fashioned merchant bank. But it has to be at large enough scale. 10 people in a room isn't going to cut it. This has to be something that is very, very significant. And that's why the first fund would be a 9 billion blended capital, blended and extended fund structure, as I mentioned. But maybe you want to respond, and I'd love to connect with you offline to discuss this in more detail. But please respond.
Sure. Again, when we were doing the World Bank was a $5 billion fund structure, right, to do a global approach. And I think you could certainly do this similar situation with some of the multilaterals, and you cobble together some of the sovereign wealth funds as well.
The key, can I just also say, the key is having a wide enough mandate. So, like CDC, Commonwealth Development Corporation, they've got 10 billion, and they've had to give some of it back to their sponsors, which includes IFC, the World Bank. Because they've not found the opportunities to deploy that capital. So that's the point I was making earlier. You got to water the root to eat the fruit. So that systemic mechanism of capacity building is really what will create all the jobs. It's what will create all the innovation. It has to be done in a joined up way. It's not cherry picking. It's really about innovation engines and the kind of help and support that has to go with it. But I just wanted to throw that the key to this is system design, and if it is a public sector entity, it's going to fail, because many of them do. This has to be entrepreneurial led. It has to be innovative. It's got to incentivize the many people who can come in and say, rather than going to Goldman or what have you, I'm going to go to Transform in this case. And if this is just managed by committee, it's going to fail. So the key is it's got to be fast moving, and that's critical. Maybe you want to just respond on that.
Well, I mean, I think that I think the issue is that I think you still need support from some of the multilaterals in order to gain the acceptance in the early stages, so that the private sector feels more comfortable stepping in. I mean, some of the jurisdictions where SDG could benefit the most are in the emerging economies, and in many instances, you have very different sets of rules once you go local country, right? And unless you've been a long-term EM investor that can understand those risks, it does increase the level of diligence that may happen with every dollar that gets invested.
That's true, and clearly, local partners and local investors are a very, very important part of this system design. And you're right, the multilaterals de-risk, they come on board. One of the things you might want to do is take a look at one of the videos on the website or on the YouTube channel, which explains how the fund would be raised and how it would be deployed. And we've got some reasons why we think it can be done pretty quickly, just with conventional institutional money. And if we can bring in the multilaterals, so much the better. But ultimately, it's really about understanding what are the pain points, and there's a strategy for that. But I really welcome these comments and this feedback, and sure, I know it's not going to be a walk in the park raising 9 billion. It's actually 9.21 billion, but it's designed as a mechanism that will give institutions, because it's designed to be a listed fund within 3 to 6 years, it will give the institutions liquidity, but also an indefinite holding period. And that's different to a 10-year, 2 and 20 10-year fund, which really doesn't work for the kind of things that we need to do. Patient capital is critical. If it can be leveraged through multilaterals, so much the better. But that's another question, and we're getting pretty technical now. So if you've got anything else you wanted to respond, please do. And what do you do now, Alfredo? And are you looking for a job, perhaps?
No, I'm not looking for a job. I just,
I'm kidding. I'm kind of saying we got to recruit a lot of people, so I'm just throwing that out there. But
well, I'm happy to discuss, with you how to help you. But I've been an investor in the emerging economies for most of my career. So I worked in Africa and in Latin America and China, and looking at investments in those various parts of the world. So familiar with on the ground rules and sort of risks around that.
Amazing. And just one more question for you. So where do you see the most, the biggest system innovations? Some people think it's the carbon tax. Some people think it's cap and trade if we're talking about climate. Some people believe it's really on policy. Some people believe existing funds, venture, private equity are fit for purpose and already work. I'm not one of those people, if you've already gathered that. But where do you see, very quickly, the top 2 or 3 interventions you could deliver for system innovation in finance?
Well, I think it's going to be, I think climate is certainly one, but food sustainability is the next one, at least in my mind.
Right. Yeah, I mean, thematically, I'm absolutely with you. I mean, food poverty, these are all interlinked. I mean, the SDGs are complex. They are incredibly interlinked. And, food is about water, it's about energy, it's about mobility, it's many things. But absolutely, it's crazy. I once heard a gentleman from Nigeria talking about Nigeria importing tomatoes. I mean, and paying crazy high prices. What's that about? Charles has come to the stage, but I'm going to go to Yem quickly. Yem, maybe you'd give a quick introduction. Just a quick reminder, we are live streaming for future reference. There's not too many people on there right now, but I'm going to keep it up. And only say what you were happy as saying. So Yem, over to you.
Hi, Steve. Thank you for having me up. I've heard you speak before, so just a quick recap. My name is Yem Adozi. I'm an architect, founding partner of Bruda. It's a multidisciplinary architectural practice, and we operate out of Lagos, Milan, and New York. And we're sort of focused on Africa-centric sustainable design practices. I'm a lead AP BD plus C, so I'm an accredited professional to consult in that regard. So I'm sort of focused on SDG 11, which is sustainable cities and communities, referencing sustainable cities and communities. I want to just focus on one thing, and then of course I have several questions to throw to you guys in the technical sphere in this regard. So the first thing is to highlight the high poverty levels in some of these communities that we're talking about. All right, and so for example, in my case, in the case of my business, we're essentially a service provider, and in that regard, because of the high poverty levels, if there's not some level of government intervention or government concern with some of these projects, there's very little willpower to execute, or even the financial capacity to execute some of these projects. So my questions to you are:
sorry,
what are
you meaning customers who can buy the real estate or pay for the development?
So let me just clarify. So basically, it's a very, very wide spectrum. Of course, there's the B2B, which we do still have challenges with, because again, the political will in that sphere to execute those kinds of projects that are sustainability design conscious is quite low, and the priorities are just in the wrong places. I don't want to be over specific in that regard, because I'm actually talking even further down the line, like micro scale, like really impact community driven types of projects, and I'll expatiate in a second. So my question really is, what kind of levers do you see, or have you come up with in terms of how to sort of massage government into taking these things seriously and doing the right thing? The second is, in your experience, would you say that the PPP partnerships are more effective than sort of like the microfinancing level, or vice versa? Which would you say really cuts to it and gets to the point? And then the third is basically, I just want to give a very simplistic example. So if you take, for example, a very small community, low income level, trying to have something as simple as pipe-borne water, right? And if for whatever reason at that time the government of the day do not prioritize that as a project, and then you guys come in with your finance, My question is, where's the profit point in that transaction? Because, for example, like I said, as a service provider, which is what we do, for us to generate any kind of profit, be it as a project or as a business, we have to get paid. And if the people in question that are being serviced can't afford some of these things, then, and the government lacks the incentives, which we see very, very often.
I kind of get it.
How do you? Yeah.
Yeah. Let me jump in. I mean, we want to keep it relatively fast moving for the people who have been very, very patient, both on the stage and also listening in. And, you know, if I can summarize, I mean, tackling poverty isn't a simple issue. But ultimately the job creation, you know, you're talking about job creation as much as you are consumption. And that job creation puts money back into the system. It gives people dignity. And aid is, for disaster and for certain circumstance, incredibly important. But we need to be able to turn, you know, to create trade and active, thriving ecosystems of good business that is well governed. So you've touched on just so many issues in your question or in your point, and you know, for your part of the economic equation to work, you've got to get paid to deliver sustainable. I notice in your profile it's LEED and BREEAM type property. For that, it's got to be taken seriously from a regulatory and a policy and a policing perspective, but it's got to be valued equally. It's got to be the people who can afford, or governments who will spend and specify, you know, sustainable building practices. It's really an educational process, but it's also a lever and strings process. So when public money is put in, whether it is aid or whether it's concessionary or whether it's, you know, whether it's IFC or it's IMF or it's localized impact investors, and there's a huge amount of impact type investment going in. Basically, those conditions are specified and part of the output. So, you know, your question around, you know, people being able to buy, we need to create many, many, many good jobs. And we have to recognize that conventional finance, you know, I've heard, you know, loans at 30% in parts of Ghana and Kenya and stuff. And this is crazy because it makes it prohibitive for the business that is potentially generating the employees or the employment, of which those employees would be the potential purchasers or renters of the property that you're talking about. So, you know, it becomes a negative feedback loop, and we have to turn it into a positive feedback loop. Mm-hmm. And therefore, you know, getting the capital price right, you know, we need data, we need better blended mechanisms. It's got to be replicated. There's many things that can be done, and it's really impossible for me to answer your question adequately. I think Bobby might have something to say on this in a moment.
Oh, always happy to add a layer.
Yeah.
I think that one layer that is needed in terms of Sustainable Development Goal gap vis-a-vis an Africa context would be the other background capital gap, which is the natural capital preservation, finance, regeneration, regulation context. It is not established at scale enough to protect all the other types of economic activity. But if we look at debt for nature, where they did with Seychelles, debt for dolphins, where they forgave, European countries forgave debt in exchange for nature preservation, that's asymmetrical debt for nature. That's been established with $3 billion since 1980, although disproportionately not in Africa. However, if you apply the same context to a mutual debt for nature, i.e. New Zealand and Canada can swap debt in each other, so too could Nigeria and Kenya swap debt for each other, and each get a national park if they cancel $100 million of debt in each other, and each create a national park through that. In other words, what we don't see in Africa reaching scale are cooperative financing that addresses the things that we are certain about, which is that biodiversity collapse will have consequences for economic resiliency that are far more catastrophic if we don't address them by going upstream than
wildlife as well. I
in
mean,
terms of cost efficiency wise, it's much more efficient for us to go upstream.
But Bobby, just for Yem's point, do you have anything specific in terms of building standards, property, sustainable construction, and the market of governments who will specify and consumers who can pay?
I mean, I think that's an advanced market commitment gap for non-vaccine goods in a developing economy context. If you look at the impact incentives literature,
like
in
Garvey,
which the Swiss aid institution has applied that in Central America, or if you look at the advanced market commitment literature in general, what you need is the stakeholders who can afford the social innovation to commit to paying if it gets invented or if it gets sourced or if it gets found. And then 19 out of 20 advanced market commitments, developing and non-developing world, are not completed each year. But the point is that that's where we get the vaccines, is the ones that do complete. And right now, we don't have that layer in a...
So it's about taking a portfolio approach. And
context, more of a project financing gap that tends to occur in an Africa development context. So I think you can either sort of address that through scaling tools that we have here regularly there, or in that sense, address the gap there that is contextual through looking at contracts for what doesn't exist there, and then offering that to the community to participate in the addressing the contract gap.
Bobby, thank you for that. Yem, does it attempt to answer the question?
Yeah.
You've asked the unanswerable question, really, but hopefully
fantastic, guys. Thanks, Steve. Fantastic as always.
Yeah, listen, I really appreciate you. For me, this is a learning journey as much as it is about me talking about the vision for Transform Global. It's about getting feedback and greater awareness of the issues on the ground. So all contributions are valid. I just want to say that. I'm going to go to Bjor briefly, unless Yem, you got anything you wanted to quickly throw in.
Just one more thing about what you said about critical mass, and I really like the example that you gave about the sausage machine, such a sausage factory.
Right.
It was very succinct. Yeah, thank you.
Yeah, thanks. I mean, as Bobby knows, some of these instruments and mechanisms, they're even though they can be remarkable, they're created once and then they're forgotten about. And there's just so many examples of where this rich knowledge and understanding can be replicated to address these things. And it's just really about joined up thinking. It's about a structure that can bring enough of the people with minds like Bobby's and Kimberly's into one place to actively not think of how do we deliver this here just to make a swift return, but how do we deliver a system design that's integrated, that's joined up thinking, that really is holistic and 360 degree, to kind of replicate it and localize it wherever, because clearly there's no one size fits all, and absolutely there has to be local culture taken into account, local understanding, local people, local politics, geopolitics, but these things aren't rocket science. They can be replicated, but just to respect.
But they are a part of design science. Context variation by design is a science out of University of Rotterdam, and networked improvement communities are a science out of Engelbartian theory and practice.
And Bobby,
both are looking at naders and apexes of what's possible and applying that to extrapolate what should happen from a prescriptive analytical perspective, and not only looking at the reductionist randomized control trial notion of average performance being the only performance typology of significance. What we need is not a Giacometti view of systems change in which the emaciated version of it arrives gaunt at the finish line with the bare minimum of goals achieved, but rather an artistic process to establish every underutilized capacity society has that can be harnessed to achieve shared aspirations. And we can do that in any region of the world, I believe.
Agreed. And this can be North America, it can be South America, it can be, absolutely. These things, when I said it wasn't rocket science, I do believe there is science, and there's an awful lot of science that isn't brought together. And the key is bringing these multidisciplinary approaches. And as you know, sometimes you need scale to do that. But you need more than scale. You need an ecosystem, and therefore we were talking about incentives before. And the key is mechanisms that can force the collaboration that Kimberly and I discussed briefly. That is anti-collaboration. We've got to turn it into active collaboration. And for that, it's really important to get the carrots and the structures and also the learning environments. Sometimes, people need to come together in nature, in the locality, with music, with art, and being able to learn. They might be talking serious things about financial instruments, and the people also who are the beneficiaries have to be included in those discussions, not excluded. But this is about experiential learning and dynamically replicating that. But I want to go quickly to Bior because I know people are waiting very patiently. So Bior, please.
Thanks, Steve. I want to say that I'm an African. I come from South Sudan, and I'm actually not in finance or economics or any ways of coming up with ways of financing the SDGs. I come from a medical background, but I came into this sort of through trying to come up with projects to implement back home, and wherever I went, I saw that really the biggest problem people had was not a lack of ideas, or people had a lot of small scale things, enterprises happening, but they couldn't scale them up because they don't have money to do it. And in a way, I disagree a little bit with what maybe I misunderstood you, Yem, but about the poorest people being able to afford some of the like housing, if you're an architect or an engineer. I think if you really develop a good system to finance housing, to finance agricultural projects, or to have finances, money available loans available to the poorest people, they can actually afford it. In America right now, if I want to go buy a mortgage, people want to see, my pay stubs. There's a system in place that checks whether or not I can, pay, that mortgage. So I go to a bank and I get a mortgage. There are a lot of, with technology now, as I was researching this thing, I came across a lot of innovations that have happened over the last, technological innovations that have happened that can improve lives in so many places, but there were no ways to finance them. So, for example, there's a company, I'm from Utah originally, I live in Philadelphia now, but there's a company in Utah that is building 3D construction, printers or whatever. And these things go for about $50,000, just to buy the whole thing. And they can 3D print houses,
right,
that are adequate for people's needs,
right,
for as little as $5,000. Now, if you go to the poorest person, somebody earning, say, $1,500 a year, these are the least developed countries, right? This is sort of like the per capita income there. And you tell them, I can give you a better house for $5,000. You're not really, and if you had a system in place where they can finance that cost, where they can, where some bank can lend them the $5,000 over like 10, 15 years, they would be able to do it.
Right.
So I mean, there are a lot of other systemic challenges that prevent that.
Can I just add that there's an amazing gentleman called Jack Sim out of Singapore, and he's Mr. Toilet is what he goes by, the name. And if you've never seen him, you really have to Google him. You'll find him, and his life is dedicated to the advocacy for sanitation. And one of the things he says is, The poor, they shouldn't be looked down to. They want to participate in the design and in the and they have amazing ideas for the solutions, whether it's sanitation. This cultural acceptance has to be brought in and factored in. But the cost of not providing sanitation to whatever it is, 2.2 billion people, and actively enabling them to utilize it, and clean water, potable water, is massive on society. But his point, and the point I was making, was they have dignity and they have incredible an eye for what they want and what they don't want. So those houses that you're talking about, Bjor, it's really important to create them, even if they're low cost, super basic. It's very, very important to enable them to be part of that process, as opposed to some Western solution that people out of university, and there's nothing wrong with that, but cook up, that is totally irrelevant, can't be made locally, can't be made sustainably. This is really about taking people's dignity into account and bringing them into it. And one other thing, just briefly, years ago, I went to something called the Arab World Social Innovation Conference just before the Arab Spring, and it was in Cairo. And a few of us were given a tour, a foundation called Hilti Foundation, where we're providing finance to low-cost accommodation, to slum accommodation, or what was previously slum accommodation. And what we found and what we experienced is the most amazing, hospitable people you can imagine, but they're often living in shacks that are unstable, that are built on top of one another, and where they're charged massively over what they should be charged for electricity or for building materials. So it really is important to say they're already overpaying for being the excluded in society. They're already preyed upon. So if we can find better methods of providing those essential services, it could be building material, it could be electricity, it could be whatever, we're giving money back. They're already paying it out, and they're already paying it. So just I wanted to throw that. But please finish your comment, Bjorn, and if you have a question or please make it.
Right. So, I guess I don't know exactly what sort of system innovations we're talking about here. I know nothing about finance, but it's definitely the most important thing you can do as far as lifting up the bottom 3 billion, the so-called bottom 3 billion that are just wallowing in poverty decade in, decade out. What I've traveled through Eastern Africa, and I just came back from South Sudan, which is my home. And when I was there, people are busy trying to make a living, and I really think the challenges we have, the innovations that have come up already right now. I'm working on a project to make, to teach kids, to provide. We're opening a school that will mostly focus on STEM and programming, and the goal was we're trying to create kids to come out of high schools ready, what's the word? Proficient in computer science and programming and all those other things. And when I was there, the reason we're doing that is we know that sorry, I've lost my train of thought there. But
the school, the school and kids and education, right, and STEM.
What I was trying to say, the innovations are, there's been a lot of innovations in technology, that allows, right now with Elon Musk has this whole satellite constellation called Starlink that will bring internet everywhere around the world. Mm-hmm. But I don't know if there are similar innovations in our financing mechanisms, and where I really think without those, these great technological leaps, will really go to waste, where they could actually, when they could, you need a combination of both. You need people to be able to buy this sort of expensive innovations. If something costs like $1,000 to a villager, that's a lot of money. But if you can find a mechanism for them to pay that off over like 5 years, all of a sudden, the cost is manageable for them.
I got you. And, there are innovations, and, for different parts of the market, there's microinsurance and microfinance, and clearly there's mortgage products. But the problem is they're often prohibitive. So we need to take some of the wisdom from the likes of the better parts of the microfinance business and apply them to those other parts. But it only works in a much broader context. So Björn, I just want to thank you. We need to move on because I want to be respectful for others and for people's time. And this is an ongoing discussion. I'm going to be doing these rooms 3 times a week, as you may have seen already. But as we deliver one of our platforms, fundingtheglobalgoals.tv, we're going to get experts in all of the areas we're talking about. And these will be programmatic, there will be interviews, there will be programs, there will be education. And the idea really is to bridge gaps, to bring people's understanding up to speed, and where there is incredible innovation, such as the things Bobby was talking about and others, where they're not just for some, bankers sitting in a room. They're explained to people in the ways that they need to understand them, visually, intelligently, and that means that people can learn. Even bankers are people too, and often they forget that the jargon it can confuse people, but often it's pretty simple. I want to go to Charles. We'll go then. Bobby's already spoken, but we'll go quickly to Bobby again, Antonio, and to Chantal, who's already been up, and you've got some points, Chantal, so I'd like to hear what your observations are. I want to wrap this up by about 12:30 UK time, so it's about another 35 minutes. That should give us time for those who want to stay for this, and we'll continue the next time. But Charles, over to you.
Yes, thank you. Who was just speaking? Steve. And if you want to keep it simple, I'm the guy. I'm a human rights activist, and I have been working, I guess, in parallel with the SDGs in trying to eradicate poverty. And it started out in the housing innovation industry of an inflatable house that could be then sprayed, rigidized, and infilled the air cavities and made into a permanent housing solution. But what you were saying was so right, in that you can't just go put something up if you're not culturally sensitive and have the engineering and the infrastructure in place. And we're dealing with a huge scale, so it's something that though each individual innovation has its place, we're looking at something that needs to be mass produced. And whether it be contour crafting like the 3D printing that was mentioned or not. But so my simple solution is there are 247 indicators, I think, in the SDGs, 240 something. And I think that there should be 3 indicators within the SDGs that are inclusive of all the others.
I could be wrong, but I think there's about 160 something, but there's sub categories as well. But you're right, there's a lot. But tell me the 3 that you're talking about.
Okay. That each constituent should have at least 2 gallons of clean water a day, dignified access within civil society to a minimum of 2 gallons of clean water a day, 2,000 nutritional calories, and 200 cubic feet of secure shelter. So it puts into measurable amounts the 3 most critical needs of life itself, and says these are things that we need to accomplish in order to bring that person out of poverty, regardless of the amount of dollars it takes to do that per person per day to measure poverty. If it's $1.60 that a person has dignified access to food, water, shelter, then they're not in poverty. If they have a avenue to create livelihood and become a contributing member of society, I'm sure everyone would appreciate a dignified access to food, water, shelter every day, whether they're in New York or in Kathmandu or wherever else. So I've started a nonprofit that has that as its mission, and we've done some small water projects in Ghana and through Clubhouse and actually through that project, I started working with, or we're just now starting to work with the Rotary Club to do an MOU to carry out a water project that was delayed because of COVID. And so it's just it's exciting to be here. And as far as funding, innovative ways to fund, I think we need a wide educational program to the general public that the SDGs, one, that they exist, the reasons they exist, and the potential solutions in order to achieve that, and the importance of achieving that in relationship to climate change and the mass dislocation of populations that are ongoing.
Charles,
that's all I had.
Yeah, I just want to thank you. I mean, for bringing our, attention. I like the three. Simplification is good. We also know that there's many complex issues that are around those three. We've got education, we've got equity, we've got climate is absolutely critical, and addressing, else we don't have sustainable systems, and the dangers of climate are just unprecedented. So we need to move at massive speed. Great that you're launching the not-for-profit. Where can we learn about it? What's the name of it?
Suki 222, Sustainable, Unified, Kinetic, Holistic Initiative. And Suki in Nepal means happy, peaceful, and prosperous. That was coined by yeah.
Charles,
and the website is sukhi.org.
Great.
SUKHI.
Yeah. And it's on your profile too. Fantastic.
It's on my profile. You can DM me through Instagram, and I think my email's on there. We've got representation in Australia. Ronnie has incorporated there with
Charles. I just want to move on. I'm sorry, but we just really got to make it.
Go ahead. Sure.
So just very quickly, I mean, the subject matter is system innovation and finance to fund the SDGs, and ultimately, there's an awful lot of levers. There's a lot of mechanisms to reduce and connect the silos, and there's the innovations. But it's really important contributions from Charles and Yem and Bjor, because it's very important never to forget the people who are on the ground who need either that capital directly or indirectly, or the benefits from it. So thank you so much. I want to go to Antonio. Then we'll go to Chantal, and we'll go quickly then back to Kimberly, and we'll go around. If anyone else wants to chime in from the audience, if you've got anything pressing, I see Robin's there listening in. Robin is doing amazing things. I've known Robin for many years, and he's doing incredible things around mobility, sustainable mobility, and I won't steal his thunder. Maybe next time he can speak himself, but I do encourage you to check each other's profiles, and also if you wish to ping other people and bring them into the room, that would be great, just to finish off. But we'll go to Antonio now, and Charles, if you don't mind, I'll put you back down to the speaker, no, I'm going to keep you there, and if you've got any comments, you can please make them when we wrap up. So Antonio, to you.
Hi there. I'm going to introduce myself briefly. I have worked for several years in around financial markets and also regulation, financial regulation. And I've attended some discussions that you might be familiar with around sustainable finance in the European Union and the regulation that is going to be imposed in the European Union, or that is in the pipeline. Some things are already approved. And everything is very much related to the Sustainable Development Goals. So my question to you is, you were talking that you are setting up a £9 billion fund. How do you measure that you are achieving the Sustainable Development Goals? And because if you look at my bio at the moment, I'm on some sort of sabbatical. I'm an engineer in my background, so I decided to reconnect a little bit with that. And I'm working with things like satellite imaging and mostly space technology, but looking into Earth and trying to do useful things that will relate to economics at some point. And I'm aware that some insurance companies are already monitoring climate change risks with these kind of technologies, or some hedge funds are taking positions in commodities markets based on this kind of data. But my impression, and that's to conclude, my impression, the time that I've been attending these very financial discussions, like regulatory discussions around sustainable finance in the European Union, which also affects outside the European Union, is that there was some kind of weakness in the way of measuring the sustainability, the SDGs. So if you could comment on that, that would be appreciated. Thanks.
Great. Antonio, thanks. And, impact measurement is one of those big subjects that on its own could take a week of these calls to and these rooms to fully explain. But the basic premise of what I'm trying to do, and to be clear, the fund is one part of what we're looking to do. The model is to create what we call a sustainable innovation and development bank, which is a cross between a multilateral development bank, a commercial investment bank, and an old-fashioned merchant bank. And the idea, quite simply, is we need certain platforms and fund structures that to help address the capacity building issue at scale and at speed all over the world. And we need innovative financial structures, especially to do the watering the root part of the equation. But we need it in many interrelated areas. There's many multilaterals and development finance institutions, and they're pretty siloed. Some of them have amazing impact measurement capability. There's many banks, there's many investors, and there's an awful lot of impact investors. But the problem is around impact measurement and impact measurement in relation to the global goals is it's very diffuse, it's very distributed, and often it's very expensive to do it right. So it becomes prohibitive either for the fund or particular investor type. And there's an army of consultants and lawyers and accountants who are getting very well paid, for essentially they're rent seeking off the inefficiency in the system. I mean, the model, the fund, the 9 billion blended evergreen fund structure that I'm talking about, it's designed to do early, middle, and late stage investing if it can be done, and time will tell whether it can be done. I believe it can be, but it's not the only thing that we're trying to do with Transform Global, and you can learn about it on the website transformglobal.co, and there's some links to other content, to videos that explain it, etc. So ultimately I believe we need big data, but we need dynamically captured data. So, in off-market transactions, i.e. non-traded financial instruments, we need a mechanism of gathering data dynamically and quickly from an ecosystem that is essentially like a smart rating engine. It can't be done automatically, and it can't be done by public data. Having said that, you talk about space agencies and we can look at impacts of farming and deforestation and many areas. So these are water patterns. So there's an awful lot of data, in short, that we're not pulling in, and as an ecosystem that have knowledge and understanding, including those investee organizations that are not included. So the basic answer is, to address this, you need scale, i.e. fund structures and mechanisms and instruments that are big enough. People try and do that in the green bond market, but there's an awful lot of lip service, even with the institutional investors who are part of Principles for Responsible Investment. There's many that are well-meaning, but there's also an awful lot that are trying to do greenwash, where they're investing still in coal or in fossil fuel activity, or things that have negative externalities, but they're measuring very, very heavily the positive stuff that they're doing, and they're not looking at it collectively. They're not looking at it as the net impact, their net externalities. So really that's the vision, is to bring very smart people together in enough scale to use best practice as it exists already, but to build on it with technology that helps aggregate that knowledge and understanding. But it has to be done in relation to the cost structures of the funds or the instruments, because if it's prohibitive, then money won't flow. And we have to realize there's also the other side of the cost equation, is what is the cost of not addressing these issues. And we have to get smart about bringing that understanding in. You know, GDP, Bobby Kennedy in 1968, over 50 years ago, gave the most amazing speech not long before he died, where he said, our GDP measures everything that doesn't matter and ignores everything that does. So we have to be really also realistic and understand, you know, our methods of accounting, you know, are really not fit for purpose as they are. Now, there are accounting for climate and accounting for impact, and there's a number of movements that could change that, but we have to do it without feeding the accountants a little bit too much, and recognize it's got to work holistically. So I believe there's ways of doing it. I don't have all the answers for you now, but hopefully that addresses the question a little bit. And I think it's really
Let
about
me just
structural.
quickly follow up.
Please.
Let me quickly follow up.
It's a really important question.
So basically, if I understand correctly, the most productive African sectors, at least in several countries, are primary sectors, so raw materials and so on. Basically, it's very dirty industries. And as you were mentioning, there are controversies when it comes to impact investment and so on. About is it positive to invest in a very dirty company to make it a little bit less dirty? Is it greenwashing, or is it? But you will be faced with this kind of challenges. So this is where my question about the way of measuring your impact wanted to go. So I understand that it's going to be holistic, and I also understand that there is a certain degree of regulation that will come into picture depending on where your investors are. But that was exactly the core of the question. Thanks.
Yeah, thanks, Antonio. I mean, the bottom line, it's a question of scale and focus and discipline and intent and governance. And part of the concept, just quickly for the bank, is we will have an independent foundation called the Transform Global Trust Foundation. It will have essentially, it won't be quite a golden share, but it's the equivalent. And it will have a professional management team funded through a portion of revenue from the bank. It will also have stakeholders who represent future generations, who represent nature, including investors, and it will include myself and the management team, and it will include also the impact entrepreneurs this is designed to support. But ultimately, the idea is it's really about, it's not just about managing direct financial risks. It's about managing all of the externalities and doing so with accountability and transparency. So that's also a very important part of the equation. But I really do appreciate so much the question. It's very, very important. Chantal, over to you.
Thank you, Steve. I actually came back to the stage. I wanted to reach out to Bior, if I may. He came to the stage and he was asking, hi Bior, you were asking for, as someone from South Sudan, for innovative ways to kind of use your land and things for the people. That was what I heard. And I was just wondering, because I actually have some ideas in regards to some things that I would like to see happen in Sudan. My partner is Sudanese, and there's a lot of kind of background and things that I've learned in relation to what's happening on the ground there. And I won't go too much into detail, but I kind of have been looking into in terms of coffee as a crop,
Right.
growing other foodstuffs alongside the coffee crop that would actually benefit the soil and also kind of enrich the crops that can be grown really well together. And there was I kind of put together, the idea of a feasibility study where we were looking at, first of all, starting in Kenya. And the idea of that is that there's a stable economy in Kenya that you can learn from in terms of how they do things using mobile technology, and also how some of these technologies could actually benefit agriculture and farming. And so one of the things that we really wanted to do was really kind of look at where there were similar landscapes, like Sudan being an economy that kind of, really would benefit from, having funding to develop the economy.
Right.
And one of the things that I did want to do was maybe connect with you somehow offline in regards to some of the things that I've been speaking about. I was trying to see if there was a way to connect with you from your profile, but
okay, I'll follow you, and I think we can maybe coordinate afterwards. But to add to that, what I can add to that is there was actually a scheme by, I think it was funded by George Clooney and a couple of other celebrities or influential people in America, and I think from what I understand, it was disrupted by the war. That ends up being a big problem in our part of the world. But what they didn't do at the time, and what for those of us that are from there that saw this thing work, was they didn't partner enough with or they didn't get enough information from the locals. That there were places in South Africa who have done that.
That's right.
And that have been stable for where you could end up you have access to East African market and maybe to export in the Kenyan coast and all those things. So but that ties into, I guess, what Stephen was saying earlier about this. I don't know. These are some of those innovations that I think we all need to think about. Is it might be risky for you to set up a huge commercial farm, right? In places where you don't know, security is not really a guarantee. But there are people that have lived there for generations. They've learned to manage the security. There are places that are, especially in the western part of South Sudan, that has been stable throughout all the upheavals in Sudan. It's not the epicenter, and those people have farms. They do their. If you could maybe devise a way to have some sort of a cooperative, I don't know, something where they can grow the plants and you can sell them. So I don't know. I mean, this is maybe getting off track, but goes back to what I was saying.
It's okay with getting off. Although the subject is system innovation in finance, the education and the understanding, as you're talking now about South Sudan, an area that has suffered, incredibly from conflict and post-conflict, is such an important, it's such an important subject, and it amplifies, if we think doing business in South London is difficult, or parts of South Africa, I think, you've got really you can wear the hat for, one of the toughest parts of the world to do business. But I'm sure you would tell us that the people there are incredible. The perception is negative, but the reality on the ground is an awful, a lot better in much of the country. It's just that the hotspots really change the perception internationally. But even in that case, how do we solve these issues? These are really tough issues, and people need, people are farming, they're feeding themselves, they're doing business. So it's not like they're not innovative. They're incredibly innovative. So we have to recognize that sometimes getting additional capacity, additional finance, there's going to be very high failure rates. But those failure rates, when you look at them in the context of the aid, budgets that are being spent, that can be okay. It's just that we need to get that money and that understanding and know-how more efficiently delivered. And I just love the fact that Chantal is, wanting to connect with you and give you ideas. So I'm really, really excited by this discussion. Thank you.
Yeah, no, I agree with you 100% about the. It's much. I think a more market-driven, solution is probably going to. The problem with the aid industry or with the foreign aid and the humanitarian aid sectors is that people are not really responsible for their own. When you give somebody hands out, they can't really take care of it as well as if you give them a loan to manage their own farm.
But it's also about the education. We know about give a fish or teach to fish, but actually this is about But this is about something different. It's about sustainable fishing in a broader ecosystem, and it's about the whole creativity about and let's face it, some agricultural practices are actually quite destructive to the land or to the soil. So what we have to do is get people using best practice, intelligent agronomy, using micro water and intelligent. Sorry, who was that?
Hello, Steve.
Is that Ian?
Hello, Steve. Hello, Kimberly. Panel.
Welcome.
Good to be here.
Throw in, yeah.
I was fascinated by Chanel's and Bior's
Chantal.
Brief talk. Yeah, Chantal, beg your pardon. And Bior. Basically, I am a foreign attorney here in Japan. I've been here for over 15 years. I've worked with a lot of Japanese companies who are extremely interested in investing in parts of Africa. Now, especially as it relates to agriculture. The problem is the perception, as you mentioned, Steve. The perception is bad, and the information coming out from those countries to the investors, that's where it goes wrong. I mean, we need people in these countries to present more favorable outlook on what they're proposing so that these Japanese companies want to invest. They're scared. That's the Japanese culture. They're very hesitant to invest. So it's not a matter of that they're not wanting to invest. It's a matter of these countries are not taking advantage of
but
that.
Ian, just to add, you came to the stage late. I'm not sure whether you've been listening to all the conversation, but the whole point is there are fund structures and mechanisms that are blended and more intelligently able to offset some of the risk. So institutional investors, if they're taking all of the risk, then it can become a scary thing. But if they're taking a portion because of risk sharing, it can be an awful lot easier. The key is getting people to understand what the opportunities are, understand the yield, understand the other parties that are potentially delivering or providing governance, and making sure that there is the positive externalities are maximized and the negative ones are minimized. But I just want to, I'm sorry for butting in, but I wanted just to say this is why investing in creativity and in storytelling and video production and localized content creators is really important. Absolutely. And not just from entertainment purposes, but from the narrative of taking best practice and enabling other people to learn, sometimes in their own languages. And we're talking about Africa. There's many languages and dialects spoken, but ultimately, there's incredible things you can do with video and with animation to enable languages to be transcended, and therefore an awful lot when you look at the SDGs in the whole, people say that's too wide. But if you don't look at it in the whole, you miss the fact that this education and it's not just localized. It is on the flows of investments. I mean, I've been in the Commonwealth with literally lines of finance ministers with projects, a list of projects as long as their arm, and many of them are not actually showcased or presented in a way that people can get. So the storytelling and the communication and the presentation, that needs a massive amount of investment too. Ian, I didn't want to interrupt you because you're saying something really important. I just wanted to add to it.
No, you've actually hit the nail on the head, Steve. Thank you so much for the clarity. I came a bit late, so maybe apologies if I misunderstood the situation. But indeed, I think the narrative, how we portray, on both sides, not just the Japanese investors, but the African side, how we portray or paint that picture to attract the investment. That's most important, because it's out there just for us to catch the right, the appropriate investor or the funds necessary to, give birth to that business relationship.
Yeah, and the creativity there is massive, but sometimes what is required is the direction, and I think I mentioned it earlier, and I want to bring Kimberly back in a second. But most important is we reset the power balance. Africa. This subject is about Africa. It's got to be developed by Africans, invested in by Africans, but with support and partnership from the rest of the world, and recognizing actually Africans have got a ton of value and creativity. It isn't a one-sided thing. Ultimately, there's also a lot of money on the continent. There's a lot of money, spread around the world with the diaspora. But ultimately, what we want to do is make sure there's this aid dependency and Bretton Woods sort of power, situation is eradicated. And that's why, there's nothing wrong with international partnerships and Japanese investors coming in, but Japanese investors have to be, as do the Chinese, as do the British or whoever, recognizing it isn't us coming in with the cash like on the back of a horse and saving the day. It's actually, symbiotic relationship. Kimberly, you've been listening so patiently. And for anyone who doesn't know, Kimberly's got a lot of experience, a relevant experience in the predecessor to the SDGs, the Millennium Development Goals, and knows the omissions there, and has been doing amazing work. And I'm so looking forward to following up properly. But Kimberly, do you have some comment on what we've been discussing, just to wrap up, because I want to close the room off in I did say 12:30, but maybe in 15-20 minutes. But so to Kimberly, to you.
Thank you, Steve. And in the South, we would say amen for what you've been saying. That
do you really come from the South? I didn't detect that.
I really do. You can't tell, huh? I know that is a big secret. But the having truly done this as one person, meeting the world and having the world meet me on the ground in Africa is where I got my start and got my education about what matters, about the power, creativity, and readiness of the people there. And it's not generic. There are people I know and love and babies I hold, and this is in my heart. And now I have folks like that around the world. I know this is a global conversation, but we've paid lip service to partnership. The people know, all of us, we the people know what we need. We're receptive to best practices. We're receptive to best information and data. And we need to bring that. Those of us who have the opportunity and privilege to be further ahead in the journey of development need to take back with us information that's useful. But this is the most significant, important, and timely multi-stakeholder, it's multi-stakeholder, not shareholder. We are all in this together at the table, from identifying the problem to designing the solutions to building those to innovating to implementing. And we need to bring the partnership of funding, the partnership of information, the partnership of mentorship and support, and a win-win economy that can be embraced by all the stakeholders. We're there now. The challenge of financing the SDGs is definitely, as we're saying, not just about mobilizing money. This needs a systemic, deeper change of closing the gap. It starts with the people at the table. Change the table, change the conversation, change the incentives, change the world. And then tell the stories along the way, because that's how we show our progress. That's how we enroll each other. All of this is a great ecosystem and the right design. Hopefully, Steve and everybody, hopefully this time we're ready. I don't think we have a choice.
Yeah, I mean, the urgency is just...
Amen. Amen. Amen.
Oh, you guys know amen too.
That's funny.
Hallelujah.
So,
I had some good church in Kenya, so yeah, I know you do. So thank you.
Kimberly, thank you so much. And let's connect and let's see how we enable that collaboration. I do, for anyone who doesn't know the detail, my communication, there's a number of videos on the site and the YouTube channel, the fundingtheglobalgoals.tv YouTube channel. There is some material on fundingtheglobalgoals.tv, the website, but this is being built at the moment. But anyone who wants to know and really wants to know what I'm doing, pop me an email and I'll send you a summary that's a little bit more comprehensive. The communication for everything is a work in progress, but it's coming together at lightning-like speed. So Kimberly, thank you so much for that. I'm just going to go quickly around the room, but I want to go first. We have someone new on the stage. Fifi, please, would you introduce yourself and make any comments you wish? We want to keep it brief if we can.
Thank you very much. Thank you very much. Good evening. It's morning. Good morning. This is Fifi from Ghana. I'm a poultry farmer. The name of my farm is Yaba, which simply means beef.
Fifi, can I just say, the audio is really bad at the moment, so there's a lot of
Yeah, I'm driving. I'm on the motorway, so.
Okay.
I don't know. Probably I'll have to join next time.
You would try if you try and do it. Maybe if you got your window up, that might help.
But I think I heard you.
Fifi, you know what?
I heard you talking about Ghana, so I just decided to enter the conversation and know what.
I want you to drive safely.
I'll just. Yeah, sure.
I'll tell you what, maybe we'll just go to other people quickly. And Fifi, if you can pull over, great. I don't want you to have a crash. So if you can't speak safely, let's talk another time and come on. I'm going to do this 3 times a week. So I really appreciate your contribution, but I want to be sensitive to the fact that we want to be safe as well. So let's pause you and come back if you wish, or come next time. So we're just going to go quickly to Charles, and Bjor, and then we're just going to say Ian, and we'll give Fifi another chance, and then we'll close the room.
I would just like to say to Fifi, put through my Instagram, message me. We're active in Ghana now on a water project. I'm not sure what your message was, but I'd be wonderful to collaborate with you and see what we can do in the future, as well as anybody else on this thread. We're reaching out to each country, and please look at the website. Contact me here. This has been a great experience. I'm only a week, just over a week, and look forward to continuing conversation with everyone. Thank you,
Charles. Thank you so much. So we'll go to Bjor just briefly now. Just for your closing words, Bjorn, because we're going to close the room in a second. So
Okay. In terms of closing words, this has been one of the best rooms I've been in so far because we're discussing something that is very is really really needed in the developing world. And I like what Steve said about making I think somehow incorporating a profit-driven the profit motive into into the funding SDGs would probably be more successful in the long run. Because people are not going to pour their energies into something where they people eventually get tired of volunteering the money. And I think what you're trying to do and what the systems innovations ideas that you're developing will probably prove to be the way forward as going to the century, as far as developing, lifting people out of poverty and at the same time, creating value that fits into the global economy somehow. I think that can be done. You need money to do that, and you need to get the funds to the right people.
Bjorn, thank you so much. It means
I will contact you in another room to continue our conversation about the coffee thing.
I'm so happy that you've made that connection. That's amazing.
Amazing.
Yeah, maybe Chantal, you want to comment quickly, and we'll go to Ian. We'll give Fifi a chance if he's not driving. But Chantal, Ian, Fifi, and then we'll say goodnight.
Yeah, definitely. Thank you to this room again and this wonderful platform that we have to connect together. I've really loved the conversation, and definitely will be connecting with as many people on stage and off stage as possible. Just the room was full of gems, and it is a long-term conversation. It's not an overnight solution, but the trial and error attempt, I think, will, looking at it from a feasibility point of view, will really make, a difference to the bottom line and the bottom 3 billion around the world. I think there was made reference to. So there's a lot of impact to be made. And for me, if you start in one place and replicate out, you might find a ripple that is adding value to the world's economy. So yeah, thank you again for the platform, and looking forward to reaching out and speaking with you all so soon. Thank you.
Thank you, Chantal. I really appreciate it. And just to comment quickly, the fact that Bjorn, you said it's one of the best rooms. I know it's amazing, but it's also a difficult room because the subject is so massive. All of the global goals and the system innovations. And what makes it complex is you've got, on the one side, you've got, financial fund structures and instruments and policy. And then on the other side, you've got, the issues on the ground and the entrepreneurs who might not understand, international capital flows and institutional investment. Frankly, I'm not a banker, a professional banker by background. I've spent 14 years. I've had a lot of rejection. I've kissed an awful lot of frogs on this journey, but I was determined to really understand what were the systemic challenges and why wasn't capital flowing to where it could have the greatest impact. And it's a great personal cost. It's been not easy. And now it's kind of interesting. I feel like I can have multiple discussions, but it is a difficult thing to kind of carry all of those discussions around instruments, around blockchain, around technical assistance, around policy level interventions, around NGO activity, impact investment. There's an awful lot to it. So, thank you for everyone who's listened and who's been and gone and stayed for quite a while. Most of you have stayed for quite a while anyway. And like Chantal said, it is a long-term discussion. But ultimately, we only learn by getting to these discussions, stretching our understanding, and being positive and determined, even if these issues worry us, and they worry me like anybody. but I have to put myself out there and say, if we don't do that, if we don't reach out, we don't get anywhere. So Ian, we'll go to you, then we'll give Fifi a chance to come in and say the last word, and then we'll say goodnight.
Okay, Steve, thank you so much. Also, the rest of the panel for this informative discussion. As with Kimberly, I'm extremely passionate about Africa. I've been in Japan, as I said, for 15 years. I've worked with a lot of embassies. I'm the legal advisor for some African embassies, doing seminars, etc. And my goal is to do my utmost legal best to assist in any way possible to assist the African continent. As a Jamaican, Africa is close to me as well. So this is it, and I hope that we will continue to have these discussions. And it was an honor to be here. Thank you very much.
Thank you. And someone was asking the question about legals and the legal. I think it was someone from North America was asking the question about the legal structure of and the safety of investing. We won't get back into it, but it's something we can go to again. But one of the panelists at the time gave a great answer because of his legal background. Again, it comes down to the perception issue. So Ian, I'd love to connect. Japan is doing an amazing amount of some incredible things around the SDGs as well. So one day maybe we can bring some of your contacts on, and
absolutely,
that would be great. I'm sure some ministers or some ambassadors, and they might want to talk about what they're doing. I also know someone who is.
Sorry.
Chantel, please continue.
So sorry, I had something for Ian before I forget. There is a lady from Zimbabwe originally who is in Malaysia, and she is basically working with Asian investors and bridging the gap between Asia and Africa, which is something that might be of interest to you. So I'd love to maybe introduce.
Absolutely. That would be wonderful, Chantal. Yeah. Thank you so much.
That's fine.
Well, Chantal, listen, I'm really happy. We're making these connections. It's fantastic. I just want to say I'm going to have these kind of conversations on this room or these rooms, but I'm also going to do it different in certain times. So we've got some amazing guests that will be coming on board. One I mentioned earlier, Audrey Sellian, I believe will join, and we'll do a little interview with Audrey. But there's lots of others, some amazing people that I'm bringing from my network, and encourage them to get onto the platform, and where we'll interview them and then give people adequate chance to really dig deep and to ask questions that they like. Impact investors, system innovators. Fifi, are you still with us? Would you like to say something? Are you somewhere that's safe?
Not so safe. I'm still driving, so I think I'll have to just join the next conversation. Charles already spoke about Ghana, that he's in Ghana, so I'll definitely connect with him on Instagram.
That's great.
Thank you very much, Steve.
Okay, listen, thank you, Fifi, and I look forward to the next time. To everyone who's watched and been really patient and stayed till the end, thank you. If anyone's got questions, DM or email me. I'll do my very best to respond, and I look forward to the taking this forward, and certainly I appreciate everybody's feedback. So thanks so much.
Kimberly.
That's it for me. I'm going to leave the room open. I'm going to go quiet, but if people want to communicate, I'll leave it open just for 5 minutes or so. So thank you so much, everyone.
Thanks, everybody. It was great to share the stage. Thank you, Steve.
Thanks, Kimberly.
Thanks. Good night, everyone.
Thank you, everybody.